I think the buzzword for today is the only certainty is uncertainty. It's disappointing. I know a lot of these individuals. Jim's doing a great job at Caterpillar, and their chairman, Dave Calhoun, an old colleague of mine from GE. I think they've done really a fabulous job in navigating some of the external activities that are going on there. If you look at Boeing, where Jim McNerney was the chairman and CEO, I think you're getting some negative reaction potentially out of Saudi. But I think you've talked a little bit about it, and I was with a group of CEOs the last couple of weeks, and their predictions are 3.7% GDP. They do acknowledge that material cost is going up. There's some issues with tariff. The majority of them feel they can handle a 10% tariff impact. A lot of what you said today, they're projecting they can get about 2.7%, 3% price increases. Caterpillar talked about that. If you think about the supply base, I think they can get some productivity out of them and concessions, and they're going to continue to drive productivity. With the tax changes, the repatriations of funds, we see more going back into R&D. We see more going back into capital programs. So again, corporate America has done, I think, a great job. And we should be cheering for what they have accomplished. And I think these external events, Saudi, tariffs, some of the issues with the midterm elections are having the negative impact and has the market a little jittery. It's unfortunate because, we've had steady, sustainable, and predictable improvement month after month, quarter after quarter, year after year.
Bob, I guess a lot then is riding on our next productivity print, right? If this supply side experiment is going to work, that is the confirmation, isn't it?
Yeah, I think so. Again, in proof positive, if you look at what they have done, we've seen the rate increases, and I guess the Feds are just trying to potentially get in front of it so they don't have to try and catch up. The last thing they want to do is stall and then have to make, instead of a quarter, maybe a half to 3/4. We've seen that in the past where they have gotten behind and then had to jump, and that's created more uncertainty and negative reaction. So I think, I think corporate America has their act together. We've seen regulations pull back. We've seen, the corporate tax improvement. We're seeing unemployment up, and those are all very positive signs. It's unfortunate that we have these, again, external events that's causing this jitteriness and uncertainty in the market today. Let's see what happens by the close and what happens in the next few days.
And Bob, just to dig into these tensions between the U.S. and China a little bit more, it does seem to be some impact from these tit-for-tat tariffs for different companies, depending on the industry and the companies and their business specifically. But at what point does this become a bigger, potentially more costly headwind for some of these multinational industrials?
Well, I think again, we have to let this play out. We've proposed $200 billion. They proposed 60. It's kind of like checkmate. We've pushed all the chips to the center of the table. I don't think they can respond in that fashion. So I'm hoping that calm, collective conversations continue between us and China. They're a player, and we can't ignore them. But in fact, we have to make sure that it's a level playing field. And to use the president's term, we want fair trade. And I've dealt with that over the last 10, 15, 20 years, whether it was at GE, trying to sell power turbines across the world and looking at taxation, on our corporation versus what I had to compete with Siemens and some of the other globals. Same thing with the auto industry, selling into China at Chrysler. So I think it's a responsible position we've taken. We have to let it play out, not overreact to it, not do any knee-jerk reactions, but thoughtful, calm heads have to prevail. And I think we'll get through this thing in a very productive way, a very successful way for our corporations.